All right, what up, YouTube? We're going to have a good time today. We're going to talk about crypto regulations and the CTFC deciding that they want to redefine what a credited investor is. So they want to make new regulations. Basically, we know what that means. They want to screw the little guy. So they're quote unquote going to open up something on their website. But I don't think that those comments are public knowledge. So I want to post a poll on Twitter and ask the exact same question and get your opinion. So down in the comments, there'll be a link to a post on Twitter. And I want to get the honest feedback from people and actually see what you guys actually think. So that way, when they quote unquote say, we're going to take questions from retail investors and take your advice to heart, right? What that means is that we're not going to see any of the answers. The results could be whatever they want them to be. And they could say that they're here to help us. So you're not going to believe this when we dive into this article. It's so funny, guys. Look at the current markets and the fact that Bitcoin is now less volatile than the S&P 500. Over 25% of assets in the S&P 500 right now, the most regulated market in the history of the world. Bitcoin, a complete non-regulated market, is now less volatile than the S&P 500. So where are you guys going with these regulations, right? Why don't you guys just let the free market play out and let a free market be a free market and stop trying to protect the middle class? Protect the middle class. Y'all funny. Ready? Let's dive deep. Historically, Bitcoin has been discussed in the news among investors as a nascent and volatile asset outside of traditional stocks and capital markets. Most of the volatility over the past few years can be attributed to sensitivity to small market cap size, regulatory hurdles, and generally limited participation in mainstream stocks and capital markets. While Bitcoin continues to be a volatile asset, it may surprise research and investors as to what other major crypto assets have been more volatile than Bitcoin. Bitcoin seems less volatile than many S&P 500 stocks. Number of S&P companies with higher volatility versus Bitcoin. Over the last 90 days, 112. Over the last year to date, 145. Percentage of S&P 500 companies with higher volatility versus Bitcoin. 22% over the last 90 days, 29% year to date. So this raises the questions. A completely unregulated, no government intervention, no regulations whatsoever, and you have an asset like Bitcoin that is now performing with less volatility than standard stock markets, or than 25% of assets in the stock market, which is the most heavily regulated market in the world. So the question you need to ask yourself, think about the news, the media, everything that you watch on TV, all the quote unquote disinformation that turned out to be real information. Now you have another government body that wanted nothing to do with crypto. Crypto was this huge Ponzi scheme. Crypto was not real. Crypto was fake. Crypto was a scam. Now they want to come in here and regulate it to protect investors. Let me ask you this. How many of you have ever fell for the same exact scam twice? When you have a free market, people learn very fast. When has any regulation ever stopped a scam from happening? Did any of the regulations stop Bernie Madoff? Did any regulations ever stop the subprime mortgage bubble? Or has anybody ever held accountable for the subprime mortgage bubble? Better yet, who is paying these regulators? That's the next question you should ask yourself. Gary Genslor, going after every crypto company, has completely wiped innovation out of the United States. I interview blockchain after blockchain after blockchain, and not one has any intentions of building anything in the United States. All innovation is leaving the United States. The over-regulation is killing innovation in the United States, hands down, just like they did with nuclear power. So we let these unelected bureaucrats, and let me remind you, unelected officials. So if there's people that are regulating these markets and dictating how me, as an individual of the United States, as a citizen, as an American citizen in the United States, there is some unelected government official. Let me remind you that. Gary Genslor, did you vote for him? No. So these people that are making these regulations are unelected bureaucrats that are handpicked by the wealthiest and wealthiest of the elite people, put in positions to prevent you from getting out of the rat race. They're going to make this industry so regulated that only the wealthiest and richest of the rich people can buy in at day one. You're not an accredited investor. You can't pass a KYC. You can't do all these things. Instead of making a 1-week digital course that any person that wants to sit there and pass that test could become an accredited investor. If there was a free digital course that taught you safely and securely how to become quote unquote accredited investor, sure, by all means, definitely share some knowledge with people. But to purposely make laws and regulations that prevent the middle class from having the same opportunities as the 1%, in my opinion, is a complete joke. Now let's dive into this article by CoinDesk. US CTFC as crypto's regulator savior? Question mark. Crypto firms might not like what they get. The Securities and Exchange Commission is treated as a villain in crypto, but the view of the Commodity Futures Trading Commissions as a government ally may not survive the honeymoon, insiders suggest. Just because Rostin is a rare government official who can casually drop a comment that suggests a futures explosion in Bitcoin price doesn't mean he's a crypto bro. The chairman of the Commodities Futures Trading Commission, CFTC, is widely seen in crypto circles as a relatively friendly face in government. B often says things that seem to reinforce that view. Speaking to students at New York University last week, B said he was cautious to be a cheerleader for crypto, but described the industry's explosive growth as an exciting and fascinating. I think there's a few folks who wish the technology might go away. Think it might go away? Think it might go offshore, but I think there's a number of reasons for US perspectives that it's important we engage with this industry. We need to ask the hard question about whether or not this is the future of finance and the future of our economy, which it very well might be. B also predicted that cryptocurrency businesses finally submitted to government rules and supervision will make investors more money, suggesting that the price of Bitcoin could even double. Getting a Bitcoin price prediction, even a hypothetical one, from a sitting regulator left Jeremy Libio, a Chicago-based attorney and law firm at Ropes & Gray, surprised. But B is a federal regulator installed by the same president that handpicked the Securities and Exchange Commission's SEC chair, Gary Genslor, who is held up by crypto industry as a government antagonist. Genslor's SEC is often accused of regulating crypto through enforcement actions, and it shows signs that it only intends to speed up the process. While B has been seen as the gentler hand who is less openly scornful of the digital asset movement, his agency has been waging in enforcement battles that belies that reputation. If somebody thinks that you're going to get a pass at the CTFC, I think that they're mistaken belief, said Gary Dewall, a former CTFC enforcement lawyer. Any violation is going to be met with enforcement actions by either regulator, and they are going to be severe. So pushback. The CTFC itself has also pushed back against its misconception that it will regulate the industry with a lighter touch than the SEC. We have been very strong in enforcement in digital asset space, CTFC Commissioner Caroline Pham told attendees at Korea Blockchain Week in August. Anybody who thinks the CTFC is not going to be tough might have missed when we fined all the banks billions of dollars for fraud and manipulation after the financial crisis. Mike Selig, a New York-based attorney law firm, said that crypto firms should not equate enforcement actions with unfriendly regulations. New laws and rules will be needed to accommodate decentralized finance, Siegel said. But I think there is a willingness on both commissioners' levels and staff levels to work with the crypto industry to bring responsible innovation to the United States. All right, CTFC commissioner to pitch retail investors definitions to get set up for crypto. Commissioner Christy Goldsmith Romero says the agency needs a new way of categorizing investors as it prepares for the new digital asset oversight. The Commodities Future Trading Commission, the CFTC, needs to redefine how it sees rules for retail investors now that the agency seems likely to be taking oversight over crypto spot trading, said Commissioner Christy Goldsmith. She intended to propose a new retail investor definition, she said Friday in an interview with CoinDesk. Goldsmith Romero, who holds one of the Democratic seats on the 5-member commission, said she'll start an informal concept posted on the agency's website asking for people to weigh in. We got more retail investors coming into our markets that have traditionally been largely institutional, she said. The current way that the CTF thinks of retail investors is so wide, she said, and includes just regular people all the way up to somebody with $10 million. Adding a newly defined category could help the agency treat regular crypto users differently under the rules than the large institutions, and that would typically mean more limits and protection for small-scale investors. So again, guys, if they want to roll out some digital course, say a 1-week course, maybe 2-hour video a day, you could use NFTs and blockchain tech to verify authenticity. So you'd have to scan your face, your ID, whatever. You could actually take a test, 1-week course, and you could become an accredited investor. We all know that school and college is overrated. We know that all of these regulations are complete BS. Me as an individual, I've been able to make millions and lose millions in the crypto space twice. I've made millions and lost it all 2 different times, twice. This will be my 3rd time turning myself into a self-made millionaire with very little knowledge, not scamming, not promoting, not getting paid to do any of this garbage, right? That all these other shady influencers have done. By being honest and producing great quality content, about good quality projects and making smart investments and taking profits and understanding how market cycles work out. Without any need, any supervision, I've been burnt many times, but never once did I ever think to myself, wow, regulations would have helped that. Actually, one of the reasons that I've lost millions was because of the United States regulations forced FTX Exchange to remove USA investors or USA users from their account. So because of these stupid regulations, or the quote unquote regulations that we don't have, forced an exchange to sell all of my crypto in the middle of a bear market. That exchange is still operating today, and all of my crypto would be on there and I'd be well over a millionaire. So these are the people that didn't prevent the subprime mortgage bubble. You heard it say there, and we held the banks accountable, fining them billions of dollars. So the most corrupt, wealthiest elite people made trillions of dollars off the backs of innocent investors. The entire market collapsed. What about GM filing for bankruptcy and the government bailing out GM? So anybody holding GM stocks that worked at GM their entire life and had a majority of their net worth in GM stocks, GM filed for bankruptcy, those people lost everything, and GM's now back up and running a multi-billion-dollar company. I personally don't think there should be any regulatory body over crypto. And let me remind you, these are unelected officials that are wasting our tax dollars. They've had 13 years to regulate crypto and create fair regulatory guidelines that every crypto product could follow. Instead, they chose to ignore it, and instead they chose to discredit it. And now that it turns out that it's everything that they told us that it wasn't, now they want to step in and regulate it to protect us. That's the biggest joke I've ever seen. But I want you to hear what you guys think. Drop some comments below. Again, my name is Ryan Mehta, and I'll catch you guys in the next one.